The US dollar is so dominant right now. US GDP is 25% of world GDP. The number of transactions globally as a percentage of all trade is 80% in dollars. So the dollar is everything. So I don't think the dollar can be supplanted quickly, but by a process of fiat currency debasement by excessive printing, a process of mounting debts, and then what's going on with the central banks and their move towards central bank digital currencies and splitting the world probably into trading blocks, I think is most likely. So I think over time, the dollar will be forced to have a lower percentage of the global payments market and get closer to where its GDP is. And that would be a huge shift. Yeah, I mean, I think that's coming. And I think they're laying the groundworks by this central bank digital currencies that I alluded to before. Facebook and their project Libra basically opened the door to all of this. Facebook said, we want to start this digital currency payment system, and we're going to do it a little bit differently. We're going to have a basket of currencies that includes the US dollar. Right? Everything we know of is everything versus the US dollar, dollar euro, dollar pound, dollar Aussie, or a mixture between those, but we never have the dollar in the basket. If you do, you take out the denominator. So what becomes the denominator? It's probably global money supply. So you end up with something very stable. And you can create baskets that are more suitable for different countries. So Brazilians and South Africans and Argentinians and all of these commodity exporters don't want to have the dollar going up and down, ruining their entire budget balances every time or destroying their companies. What they want is something stable that has value. And as China and others have become larger consumers of the world's goods, it's kind of weird for somebody to sell oil from Saudi Arabia and sell it to the Chinese and get US dollars. So somewhere within this, I think your idea of SDRs based around this new digital currency technology is probably where it's going. And I think it'll be regional as well as a global version. So I don't know, it's a fascinating time and it's going to be a huge change coming. Facebook has a global network effect and one of the largest networks in the world. And we've all got relatives in different countries that we would like to send money to. We buy goods in different countries. And that's a very clunky system. You put in your credit card, blah, blah, blah. Now, if you can have your wallet on Facebook and I could send you money instantaneously, well, that's super empowering. All of the remittances and all of that stuff that happens across the world. Also, if I'm buying something from China, the Chinese don't have to have a US dollar bank account because that becomes a problem. Or if Facebook got their Libra project off the ground, which is the multi-currency basket, then it allows everybody to price goods in a more stable currency. It's very disruptive. I think in the end, the central banks will allow it because what they need to own is the on-ramps and off-ramps. As long as there's KYC and AML going on, the on-ramps and off-ramps into the system is the super important thing because they need to collect taxes. So I think there's going to be more regulation coming. It's going to get pretty scary, but the regulation will allow for full adoption. The US government knows every penny that goes in and out of your bank account, every single asset that you own, what car you drive, everything. They know where you go on holiday. They know every credit card statement, everything. They can do that now. So I think it's a false narrative that something's going to change. What changes with digital currencies is the ability to create individual monetary and fiscal policy. And that leads to the rise of behavioral incentives. And this is where China is going. And this is where they will all go, whether we like it or not. So they can say, Angelo, normally they would say, we caught you driving 10 miles an hour over the speed limit. I'm going to give you a fine. Now they can say, we've taken the money out of your wallet. Okay, is that any different? No. Can you have a claim back? I'm sure you can. But they can give you incentives to do things that they want. We will give you money if you do X. We will take it away if you don't do Y. That's what China is starting to do. That's what is coming. And it's the rise of behavioral economics, big data sets, and instant digital world. Look, I mean, everybody has a different way of doing things. I think a base layer for family offices should be gold and Bitcoin. Gold has its proven storage, its proven store of value. Bitcoin has the proven store of value and upside. It's a nice combination. And then around that, you can take more risk in areas that you want, whether you're allocating to emerging markets or allocating to direct equity or VC, some of that stuff. It's very interesting. Or whether it's allocating it to hedge fund managers who are undertaking arbitrage. There's lots that can be done. I just like the base layer of everybody's portfolio to be gold and Bitcoin.